Hey everybody, it's Mike Weller from the Weller Group of Keller Williams Realty. We are here with our monthly mortgage moment with Momi for July 2022. Hi, Momi.
Hi, Mike. Hi, everybody.
So what's happening? What's happening in the mortgage market? What's happening with the Fed and inflation and all that fun stuff?
Well, I'm sure all our viewers have seen that the Feds, because the big news is the Feds are raising the rates again. I think in 2 weeks. So the Federal Reserve Board is raising the rates again, and it never fails. You and I have talked about it many a time, where I have buyers or borrowers call me and say, oh no, does that mean, what does that mean for my pre-approval? Our rate's going to go up a whole point, because the Feds were actually going to raise it 75 basis points, which is like 0.75, but now they're looking at a whole entire point. And really, just to iterate really quickly, what that means is when the Federal Reserve Board raises rates, it's on short-term loans. So auto financing, auto loans, credit card loans, lines of credit against your home. So your second mortgages are going to start to go up. The payment's going to start to go up. Installment loans, maybe even, I'm not sure, but educational loans, although those might be protected because they're government loans. So all those types of loans go up. Or all those types of rates go up when the Federal Reserve Board raises their rates. But what it does is it has the adverse effect on long-term mortgage rates. So the last time they raised it was at the beginning of this month, I believe, or the end of last month, right? We talked about it. I think
so, yeah.
Excuse me. They raised it and our rates rebounded, and we had a few really good days of lower rates. But then that leads me to my segue of inflation. I think maybe our viewers have seen on the news. What have you heard, Mike, about inflation?
We're officially over 9% now.
Right. So the media was reporting last month that they thought it had peaked.
Right. And
you and I talked about, we didn't think it had peaked. And you're right, we're officially at 9.1% on inflation, which, the unfortunate thing about inflation is when the Feds raise their rates, long-term mortgage rates typically go down. But with rising inflation, that also raises the long-term interest rates. So it's kind of like, they're kind of like stuck, like the rates are just stuck. They went down and then they came back up with inflation. So that's where we are with that. And then of course, the other big news is everybody's saying, we talked about it many months, well, not many months ago, but last month and maybe even the previous month, about there were indicators for a recession, an upcoming recession. And now the media is talking about what you can do when the recession hits. I mean, I don't have the magic crystal ball when,
right,
but I'm pretty confident we're headed for a recession. What are your thoughts, Mike?
It seems like it's very odd though, with the unemployment numbers being so low, that this would be a recession. I think from what I'm hearing, this might be a little bit of a different kind of recession. So, traditionally they measure or define a recession as 2 consecutive quarters of negative growth, right? GDP. And then I heard an economist recently talking about how they look at a recession as 2 consecutive quarters of negative income, gross domestic income dropping. So I don't know, but it does seem like we might be on our way to a recession, or in one already. It's just, you don't know that you're in a recession right away until it gets measured later on. It's another, trailing statistic.
You tell me because GDP has been negative 2 quarters in a row.
Yeah.
And, I know this is throwing something out, but the bond market, they look at all the data and there's an inverted yield curve, and an inverted yield curve always signifies a recession. Yeah. It's pretty much never been wrong, but you're right about the unemployment. Unemployment numbers are relatively low, but I think it did jump up. It's been, 9,000 initial jobless claims. Those are people filing for the first time, is the highest since December. And I think what's happening is the unemployment, it's going to be a soft arrival. Does that make sense? It's going to be slow and soft. And when it hits, like you said, we won't know we're in a recession until boom,
Right.
almost it hits, but I
Right.
haven't heard gross domestic income. Is that employee income?
Yep. You know what? That was just one economist I heard talking about that. So I don't want to speak out of school for them.
How interesting.
Yeah. Um, but yeah, it is interesting with, with layoffs coming, yet so many unfilled positions out there. But it seems like there's there's a worker shortage in a lot of industries,
Yes.
service, construction,
Airlines.
airlines. Yeah, yeah. So, and then the layoffs likely will be a little bit more, I don't know, professional or white collar or different types of industries too. So it's almost a mismatch of, economic needs in the job
Well,
market.
I'm kind of hearing layoffs. Well, I'm hearing layoffs in the tech industry, like big tech companies,
Mhm.
massive layoffs. And then I'm also hearing layoffs in our industry, like some of
Yes.
these, I don't want to say retail branches, but and I'm not sure about the big banks, but some of the call centers or entities, mortgage companies that had big calls or a lot of loan officers, they're all getting processes are getting laid off. I mean, let's face it, it's a little bit slow this year, so there's not a whole lot of business, right? So you can't carry people on the books if you want to stay black and not in the red, right?
Right.
So yeah, it is very interesting. I did definitely hear that unemployment's low, so odd that we're going into a recession.
Yeah, it's a little bit different than what we're used to, I guess, previous recessions, more recent previous recessions.
And I also think
So,
we're a global market, right? We've got the war, we've got Britain's prime minister resigning. I mean, all those things, because it's a global market, has an effect on us.
yeah,
In fact, I just heard on the news that the euro and the American dollar are basically equal now, dollar for dollar
yeah,
or euro for dollar,
yeah, yeah,
which is crazy. I don't know. It used to be 1.6 to 1.
yeah. It was, yeah. Oh, but I do know, yeah, I mean, inflation is happening all over the world, not just here,
Yeah,
too. So,
exactly. Yeah,
yeah,
no, you can see it in the futures. Yeah, you can see it on some of the on the other stock markets like the Nikkei and even the Europeans, their stock market.
right,
But I mean, so the good news, not to be all doom and gloom, right? Inflation numbers are up, unemployment's going up slowly. The good news, kind of, I mean, if you want a silver lining on the recession, is that rates will typically go down with the recession. Right now, they're going up with inflation because
right,
inflation keeps rising. But if the recession comes, we'll start to see rates trend back down, right? It's historically moved that way. And then, I mean, let's talk about the real estate market, Mike. There's more inventory. So I have a lot of buyers. You and I have a lot of buyers coming back into the market that got frustrated last year.
yeah. It's definitely a more balanced market now. It's definitely, I mean, it's crazy how much of a seller's market, like a heated, overheated seller's market we were in 6 months ago, 4 months ago, 3 months ago, and now it's like very much a neutral. It's not a buyer's market per se, but it's a neutral market where buyers, there's inventory out there, they can shop, we're seeing repair requests back, repairs being negotiated, houses staying on the market for more than just a weekend, without multiple
A few
offers.
hours.
So yeah, yeah. So it's certainly changed. It's certainly changed a lot here in the last couple of months.
And those of us that have FHA buyers or maybe even VA buyers, because it's zero down,
Yeah,
those offers, rather than, I mean, I hate to say it, but rather than going to the bottom of the pile of 30 different offers, right?
yeah. They're
It might be
viable.
one of two.
Right.
And the sellers are actually considering it because at the end of the day, it doesn't really matter what kind of loan financing you get, you're still going to get paid whatever your profit is. It's still the same time frame.
Yeah, as long as it closes. Well, I mean, once it closes, it doesn't matter if it was cash or a conventional loan or an FHA or a VA or whatever kind of loan. Once it closes, it closes. So,
Exactly.
yeah. So anyway, yeah, that's kind of the update on the real estate market. And I don't know, what do you think's coming here the rest of the summer with interest rates and mortgage rates and all that?
Well, I mean, if the
It has
Feds,
dipped back a little bit here recently, right? The
it
rates
has,
come.
it definitely has dipped back. Yeah, I mean, I have some rates below 5,
Hmm.
obviously depending on loan to value, depending on credit score, depending on
Sure.
the type of loan. But I have them below 5 now, which I never would have thought about that, you know. But in the summer, if the Feds do raise the rates in a couple of weeks, which they're expected, whether it's 75 basis points or 100 basis points, 0.75 or 1 point, we'll see long-term mortgage rates dip down. So, refis have gone down, but I am still seeing people refinance because they need cash out,
Yeah.
or they're taking cash out to pay off their credit, especially with the recession, Mike. If you haven't paid your credit cards off and you're carrying a balance,
Do it, right?
or you get laid off, or well, actually not get laid off, but if you are carrying a balance, that when the Feds raise the rates, your credit card rate could now be, I mean, I don't know, 24, 29%, right?
Yeah.
Is that a fair statement?
I think so. Yeah, I don't do that, so I don't know. But yeah, I would think
don't
so.
either.
Yeah.
But I'm just looking at, like, when I get the paperwork on a credit card, it has the APR. I mean,
Yeah.
I don't carry balances either, but for those people that are, if you refinance and take cash out, doesn't matter what your current rate is. Let's just say your current rate's, I don't know, 3%. Let's just use an even number, 3.5, whatever.
Right.
Your credit card balances are 25, 29. Even if you got a rate, let's just say 5%, 2 points higher, you're still saving yourself money because you're going to end up paying off those credit cards. And most
Right.
people have enough equity to do that. You're actually benefiting yourself because the mortgage interest, check with your CPA, is typically a write-off. Your credit card interest is not.
Right.
Never is, never will be, right?
No. So
I mean, just a thought, right?
Yep. Yeah. But then don't run them up again. Don't pay them off and then run them back up.
Thank you for saying that. I always tell people, pay them off, cut them.
Yeah.
Cut them and shred them and throw them in the garbage.
Yeah. So
Agreed. I agree. Yeah,
Okay.
it does not give you license to go run them up again.
No.
Yeah, that's my prediction for the summer. Our rates will probably dip down. If the recession hits Q4, we'll see them kind of trend down as well.
Okay. Okay. Well, that's an interesting update here for July. So we'll keep checking in August, September as we get deeper into the summer and see where we're at.
Yep,
So okay.
for sure.
All right. Well, thanks, Momi. Thanks for joining us here
Mike.
again. Yeah, absolutely. Absolutely. And thanks, everybody. Thanks for tuning in. We'll see you next month. In the meantime, reach out with any of your questions, loan, mortgage questions. Reach out to Momi or real estate side. Give me a call.
Bye, everybody.
All right, take care, everybody.